Yo, what's up? Can you hear me?
Yeah.
Let's go, man. All right. Um, all right. So let's talk about IV today and what type of contracts we can be grabbing when we trade. So, wanted to make this quick video and go on a little small rant on trading options, trading naked options. I'm not gonna get too much into detail on what every specific option is. You guys can figure that out. The theta, vega, and gamma, and all that other stuff. You guys can do your own homework. But I do want to mention something about the IV. Okay, so here is CGC. So CGC and Neo have been two of the stocks that have been trading, real hot lately, and a lot of people have been posting all these profits. Like 100% on CGC. This swing on Neo, this breakout on Neo. So it's been a little chaotic and it's been on everybody's radar. And those are the two stocks that I've been staying away from for the specific reason of the IV being real high. And another reason is CGC. It's more of a the news happening with the presidential election and stuff. So there's a lot of factors that go into it when you're looking at a stock, and especially when it's the type of season that we're in, the market sentiment, the type of breakout that it had. Like this one had a nice breakout. This one we set some alerts on this one, and it actually broke to the top. And I know Nick was able to trade it, But again, I personally did not trade it, even though I saw the breakout. Even though I saw it all happening, I still did not trade it. It has earnings pretty soon in a few days. I think Monday, the next Monday or Tuesday. Earnings on 11/9, right before market. So these are the type of stocks that I do not like to trade, and let me show you why. Okay, if you go to the trade tab, you look at the percentage right here. It says 190, 31%. Okay, it's 140% for these 21.5s. The 21s are 131.17. Okay, and look at it costs 118 to 128. Okay, with that IV being that high, what that means is it's the contracts don't really move as much. Okay, the minute that this drops, the IV starts dropping, your premium starts dropping as well. So if we have this from 118 to 128, when we get a pullback and the IV drops, this thing will drop to like 110, 109, whatever the number may be. Who cares? You guys go figure out with the Vega and do all the mathematical stuff that has to do with the options, right? But I'm just letting you know now that when this pulls back and the IV decreases, so right here, this is a perfect example. This is when Nick was actually in this specific trade, and the alert hit right here at this 19. So we knew that it was going to keep pushing, and of course the 1930 was the next entry, okay, due to the pre-market stuff. And he ended up taking it long, ended up taking profit right here. But even he himself mentioned that when this pulled back, okay, the same contract that he was in at the time, I believe it was a little over 100, not 190. Right now it's at 190. It's super high. And of course it was a weekly, and I think a lot of people are trading weeklies, and because the IV, what happens is, let's just say CGC was at 100 and these guys held it all day long, the contract, the premium went higher, not just because the stock went up, but because the IV went up. So the IV increased like super high. It's at like 190 now. So anyway, so these guys who got in here probably made, over 100% on these in the money contracts. And again, that's all cool. Congratulations for those who swung this, for those who day traded this breakout on that specific day, those who bought the dip here. Congratulations to you guys. Okay, I'm not taking nothing away from your profits. One thing that the one thing that I am mentioning though is the fact that you are taking a higher risk when you're trading a stock that has high IV. Okay, when this thing pulls back, you're giving away some of your profits. Some of the premium is decreasing, especially here on this next day. When it drops, same thing happens. You lose a lot of value on that same premium. And let's just say you had the let's just say you had the 20 call weekly. You could have been up real huge, and if you would have held all day, you still would have been down here. Even though we're still kind of up, your contract would have been trashed basically, just to the high IV. And again, that's something that on a personal level, I personally don't like to trade those. I stay away from those as part of my discipline, part of one of my rules as as I walk in this, trading career. That it's a full-time job for me, so I got to be smart as to what I'm trading and how I'm managing my money. And especially trading these naked options will crush you, or they'll make you. Okay, this with the high IV, for me, it's always like a gamble. It's the way that I view it. But again, it's every option trader's dream for the IV to increase. Okay, like I said, I'm not taking anything away from your guys' profits. It's cool. But for those new traders out there that have small accounts, and not just small accounts, but want to grow accounts, my advice is to do your best to stay away from some of those high IVs. Okay, because you don't want to get caught up in something like that where you buy a in the money contract, and next thing you know, you get this pullback. And what happens at the pullback is you see your P&L and you end up red, and you wonder why. And even though the stock is up, your P&L is still red. Well, that's going to bring a lot of emotions to you, and what's going to happen is you're going to cut loss. Okay, the trends technically has not changed, but again, I will not trade these high IV stocks. Okay, the trend on this one is actually pretty nice, but again, it has earnings coming up. It has huge IV. Okay, so we're at 190. That's insane for a stock to be at $20 and a high IV of 190. That is ridiculous. Okay, so look at Tesla. Look at the IV on this thing, 77% for a $423 stock. Okay, so again, 190% or 77%, right? It just kind of makes sense to grab something that actually is trading decent, is trading normal. There's nothing crazy about it. So another thing that you hear a lot of people say, I will always tell my guys to sell into strength. Okay, selling into strength, it's also the reason where IV kicks in, and that is something that I do understand. So right here, we had a nice pump. We had this volume come in on the breakout. I know Nick was in this specific play. So my thing was, when you see plays like this and they push heavily with some momentum and some volume, and what happens there is the IV increases. As the stock goes up, the IV increases so much that it brings up your premium on your weekly contract. Some of you are trading weeklies. I don't recommend trading weeklies. I recommend grabbing 2 weeks out, Monday through Wednesday. Once Thursday and Friday comes, grab 3 weeks out in the money, times 2 contracts, let one go at the pullback, right? And then the next one, sell it like maybe around lunchtime or midday, whenever it hits your targets, however you're going to play it. So selling it into strength, it's actually, it makes sense because, like Nick said, Nick can explain to you exactly how he traded it at the pullback. His contract actually was at a break even when we hit a little bit higher. So Nick, can you just explain real quick your contract right here?
Yeah, so I got in over the pre-market high, and I ended up taking profits like at the top of that 15-minute candle. But I was kind of watching it throughout the day because I remember saying, I was like, oh, I could probably just hold this all day. Like the volume's pretty crazy. Like I understand the breakout on the bigger picture. But like, I just felt like selling into strength. I saw we were at some resistance. And I think I was checking the expected move. I don't think it was anything like super crazy. So, I was prepared for it to pull back. So I just figured, I could get out, but I kind of wanted to watch it. And I saw my contract, I think, um, let's see, I got in at 0.85, took profit at 101 on, I believe it was, a weekly at the money, so a 21 call. And it when it pulled back, I just kind of watched it, and it dropped, well below my entry point, which was still higher than my entry point at that point. So I would have been right on the play, even though the price was still up. And then I don't think it got back to my exit point, like you were saying, until about like the $20 mark.
Yeah.
But I mean, after that, if you do Bueller's Iron Hands, you're in this play all day. And that initial dip that I got out of before it happened, that was like the biggest dip all day.
Yeah, right here.
And it just kept running and running all day. So, those are the plays where if I would have gotten time, I did know, I did understand the move, and I know CGC is one of those stocks that can run, 10, 20% in a day, that I could have held that all day. And I did see it at the end of the day, and it was well over 100% on that contract.
Yeah, and a lot of it is because of the IV too. Especially, you understanding that you grabbed a weekly, selling into strength makes sense.
Yeah.
Because you don't want to risk the fact that it was going to have a pullback, and then you would have looked at your P&L and you would have saw red right away. And
Yep.
a lot of times when that happens to any trader out there, that can get you emotional. People start seeing red, and it's automatically it's automatic question in your head: should I still hold this? Or wait, let me go check out who called it out. Let me go ask them if I should still hold this, or if it's still good, or if the play is still valid. Whatever the reason may be, I see those questions a lot in the chats. Okay, whenever I see people playing these charts, and somebody just made 100% on CGC, and somebody's saying like, oh, I swung it. The next day somebody's asking, is it still valid? Is it still going up? Can I still hold it? Like, you're asking those questions because, first of all, you probably have no idea what's going on with the stock or the movement, or when the other guy got in, or how much money he got in with. Second of all, you are probably red, and you're feeling very, very emotional because you're not understanding the IV, the movement. You're not understanding anything about a naked option contract. That is the biggest thing. And this is why the IV, this is something, one of my rules that I do not touch. This is 132%. That is ridiculous. Okay, let's look at NEO real quick. Look at this, 111%. You guys seriously want to try that? Look at this, 80%. So you're paying $1.12 for a ticker that's $35. Like, come on. Okay, let me look at JPM. Okay, look at this stock that moves decently on a normal day. It's at 57%, right? Look at this 42% contract. Look, 130. What was NEO? Like 111?
$30, yeah.
Like, come on. Like, see the big difference? This is $103, right? The contract's like 140, 165, whatever, right? And then you look at a stock that's only $35 and you're paying over $100 to trade this ticker when the IV is most likely going to crush you. Okay, yeah, this was a bull flag. I even posted up for the team, and I was like, look, this is a bull flag. Okay, here was your dip buy, and everything about this was up. And like I said, I saw people asking about NEO, is it still going up? How high do you think it's going up? Oh, where's the breakout? Well, Yes, it's breaking out. Yes, it's doing all that. But look at the freaking IV. It's ridiculous. I am not touching that with my money. I would rather trade JPM, Tesla, Shop, Amazon that have decent IV right now versus this thing. Okay, this is like running a lot of hype right now. It's just running. Okay, so if you're asking me if it's still going, the answer is yes. This thing is just going.
Going like crazy.
Yeah, and look at the volume right here. So this is why your IV is increasing, or your IV is so high because so many people are trying to buy this. And what's going to happen is when it gets normal volume like this is normal volume, you're going to wonder why your contract's not moving. Just like that. That's literally it. So, you know, again, if you guys are trading some of these stocks, make sure that you're grabbing time. Okay, let me show you one that I play that has time, that has decent setup. Okay, I called out GS. Some of y'all took it, some of y'all didn't. So here's the reason why I called out GS. All right, this is actual like an actual setup, something that makes sense, that you can grab a naked option in the money and hold it, whether it was weekly or 2 weeks out, 3 weeks out, a month out. This type of ticker stock setup makes sense. And this is something I always say, that if you know how to draw support and resistance levels, if you know how to identify support and resistance levels, why aren't you entering at support or resistance? Why? Okay, are you waiting for some magical indicator to tell you when to get in and out? Or are you waiting for somebody else who's posting profits on this specific ticker, you know, to give you a confirmation to say, hey, I made 100%. Oh, wait, okay, now I can make 100% on it. What type of confirmation are you waiting for? Okay, that is the biggest thing. So this specific ticker had a setup, right? So it had a big red wick here. They say buy low, sell high. I still don't understand why some of you guys don't do it. Okay. Now, what I ended up doing, I saw this at support right here. Look, I bought it on this day here. Okay, but the stock is still red. Well, yeah, it's red, but it's at a weekly support. Okay, weekly support. If you're asking me how I draw weekly supports, I just showed you the weekly support on this specific stock. We're right above it. So my stop loss is way down here. So buying something like this with time, okay, go to the trade tab. Not November 6th, that's a weekly. 13th, you're only doing 2 weeks out, so you're able to swing it for a day or two. You go to the 20th and you're able to swing for like 2 to 3 days, depending on how far this ticker moves and how far into the strength it can hit. Okay, if it moves into strength, then for sure take it. But if it's a nice slow trend up, you hold it. Okay, so there's a difference on what type of ticker with momentum you are taking. So look at this contract, right? The November 20th, right? I called out the 192.5 for 385. It's currently at 1065 high, 990. You guys do the math. Look at my IV. It's only at 42%. So the IV has not increased any further or any crazy, you know, momentum. There hasn't been any of that lately on this specific ticker for GS. Now the contract made sense and the movement makes sense. Look at this huge green candle. Look how much profits you guys could have made had you taken this right here. Okay, that's a pretty decent move. Some two of my students actually took that trade. One of them was so excited, you know, he messaged me in the morning when he got the alert right here at this like 197. Yeah, this 197, this 196.50, where I told him where the targets were going to be, and he was so excited. He said, I haven't made this much percentage profit in a while. Well, because look, everything makes sense. It's a weekly support. It's a contract that makes sense. So if this were to go down to this bottom, the stop loss was 186. Stop loss is 186 from your entry of 189, okay, of $4, right? But look at going up. You're at 198 from 190.
That's one of those things I like to about taking plays like that, like the dip buy plays, as opposed to taking a breakout. Because, you know, look at all that extra movement that you captured buying that dip instead of waiting for that breakout to confirm. You know,
Exactly.
and just because you got a little bit of time on it and you could sit on it for a while, you know what I mean? And it's like, it's also low risk because your stop loss is right below crucial support. So like if that breaks, you know, it's unlikely that it breaks because it's been such strong support. And then so you have a high reward or risk to reward ratio. So like those kind of plays make a lot more sense.
Yeah, and it's a nice. This was a nice play. So whoever
Yeah.
took it, congratulations. And then again, we were able to enter it again today. We actually entered right here at the break of the pre-market. Look how tight that was. Right here. That is a tight pre-market. That tells you to just go long and don't think. Don't think, just go. Okay, but again, it's a stock that it's at a weekly support. Okay, it's a stock that we bought the dip on, that the risk was very low and the reward very high, as you guys can see the contract. Told the guys to buy it for 385, 192.50. Okay, 990 to 1060. Again, you guys do the math. So this is why, okay, I like trading nice setups and grabbing time on contracts that make sense. Okay, when you're trading things like CGC and NEO, two of the stocks that people are posting on Instagram and posting thousands and thousands of profits, I could care less what they're making. They're the ones taking that risk. And again, if you're a new trader and you have a small account, stay away from those. Yeah, they're 23 bucks, but didn't you guys just see the IV that I just showed you? Like, it doesn't make sense to get in those high risk plays. It's almost like trading a penny stock where the minute you get in, that thing can drop like everything that you threw in your account, like whole account, that thing. It just doesn't make sense. So again, please guys understand that trading naked options is huge risk as well. Go figure out what the Vega and the Gamma, the Theta, the Delta, what all those things mean, because when you guys do that type of homework, it'll mean everything. It'll give you a different perspective on what you're trading, how you're trading, and how you're going to manage your account size. Okay, if you're grabbing a $100 contract and you have $1,000 account, cool. But again, if you have a $500 account and you're grabbing a $100 contract, don't do it. Okay, especially if it has a huge IV like that. And always grab the in the monies 2 weeks out, 3 weeks out, depending on the week. Okay, just like I said, Monday, Tuesday, and Wednesday, I'm grabbing 2 weeks out. Come Thursday and Friday, I'm grabbing 3 weeks out, a little closer to in the money. Now, if it's a swing play and you have a target, okay, it should make sense. Okay, and the perfect example I will give you right now, it's V. Okay, this is one that I also called out in the chat, and right now it's green. Okay, I went to the trade tab. I looked at this specific ticker. Okay, I even broke it down right here. I did my own homework. Okay, all these targets, broke the range and retest with the push up, right? So the range, I'm talking about this red candle, okay? This broke this range here, this weekly range. It just had earnings, so it came down, and now it's testing from the bottom, and it's closing inside. Okay, so the 187. All right. Go on the 4-hour time frame, right? Like I just said, if you know how to draw support and resistance, weekly being your major supports, why aren't you in it? Okay, so here we get closer, right? Here's some resistance right here where we broke down from the weekly. Here's the earnings, right? The earnings did not really drive as much. right? We just went from this 185 to this 178. So nothing crazy, right? We try to push above this 187 right here, you see? And then same thing right here, this 187. And look where we're at. This is why I said the stop loss would be a tight 187 or a loose stop at 186.50, because you don't want it to go below this specific area. And now look what's happening. Okay, the swing play was called out right here at this bottom. Okay, anywhere in between this 187 and 188 break, and you were to take it. Some of you were green today. Some of you took profit. Some of you are probably still in it. If you are, awesome. And again, for this specific one, the target is up here. Okay, this 195. So let me tell you why I did this specific contract. Okay, so the 192.50, look, it's 350, 385. 192.50, look, 258, 295, right? So we're only at like 30%, right? 41% IV. So again, it's decent enough, okay? This is not the in the money contract, but it gives you enough time and it gives you a decent target. So the 192.5, you're gonna be in the money once we hit up here. This is why it's a swing trade, because it's gonna be, this is the target. So we already tested from the bottom on the weekly level. We're holding support. We pushed up in strength, and now we're pushing it. And now we're waiting for the continuation. The continuation is what's going to bring you into the money on that specific contract, and you're going to be able to take profit on a safe play.
What's nice about that too is when you're trading sideways like that and your IV is really low and then you break a range like that, that's when you get that IV pump with the contract. And because you got in it with low IV and it's starting to move, you're going to get your contract juiced up too with the IV pump.
There you go. That's when you sell into strength. So
Yeah.
whenever you guys see that breakout, you're in a swing, please sell into strength. Sell on the pump. Okay, there's no reason why you should just hold it all day, because you can technically sell on the pump. Okay, take your profits or scale out, whatever you want to do, and buy the dip again, because you're still understanding the fact that it's pushing up. And if you watch the Iron Hands video, and understand it that Bueller posted, you can still buy the dip. Okay, don't walk away from it. You know, set your alerts. This is what I do. I set my alert, I buy. I set my alert, I sell. And it's exactly what I do. At this little yellow box, if it's above it, I'm buying. If it's breaking this level right here, I'm buying. Okay, the take profit, all my alerts are up here already. Okay, multiple alerts, multiple. All right, and then reset it from the bottom. If the take profit, let's just say the first take profit was 190 and it pushes to 191, reset your alert to 190 so you're in the green. It's simple. So if you take profit at 191 and it comes back down and it hits the 190, guess what? You buy the dip. Just like that. All due to you setting your alerts, you staying focused and understanding that this weekly support is holding and it's just going to go back up. Just like that. Of course, watch market sentiment. Of course, watch for news, watch for upgrades, watch for the overall sentiment in that specific sector. So check things like PayPal and MA, maybe SQ and Shop, you know, if you guys want to check those out too. So again, do your homework and understand the type of IV that you're getting into, understand the risk to reward when it comes to your contracts, and don't cry when you're wondering why your P&L is red because you grabbed a 150% contract and you're red on it. Please. So I really hope you guys understand on my point in trying to make this specific video on you guys grabbing certain contracts and grabbing time. It is very important to grab time in the contracts. And again, if you don't have the account to grab the in the money contracts, please do not trade these. Okay, some of you are a little crazy in trading, whole account CGC calls, but again, if you're making money, let's make money. Again, I'm not knocking you for it. Make your money, do what you do, but again, don't wonder why you're losing money at the end of the day when you're trying to trade these stocks. So again, if you guys have questions, if you guys need help, charting, or you guys want to chart, message me, direct message me in the chat, tag me in the technical analysis channel and Bueller's chat. Some of you guys sent, I know some of you guys always DM me, which is cool. But again, just remember that when you're sending me a question through DM, also remember that there might be somebody else who has that same question, and just maybe too timid to come up to me and ask me that specific question, or thinking that I'm going to charge you for for a charting lesson or something. Like, I'm not. Okay, we all work together, we all help each other, and this is why me and Bueller always making these videos for you guys. Nick has been a big help when making these videos, and gives the collaboration with me, and it's just about building. So remember that any type of question through DM, you can always post it in the main chats. Again, somebody else might have that question, so you can answer their question as well. So please feel free to tag me, ask questions, and if we can't figure it out, we're just gonna have to Google it together. So so hopefully you guys enjoyed this video. Again, let me know if you guys have questions. And again, Nick, thank you so much, man, for just being part of it, man. And I really appreciate what you're doing here, bro.
Of course. No problem, man. It's a pleasure.
All right, guys. All right, thank you, Nick. Thank you, everybody. You guys stay green, and I guess we're going to watch the elections. All right, guys. Thank you.